Good evening, everyone. This is Veer Maheshwar Charitable Trust Latur MS India organizing daily international webinar series. In this series, speakers are invited from India and abroad. The speakers are selecting the topics as per their field of study and interest. And this series is running from last 5 years. Today, the topic is Indian capital market in the digital era. We have invited Dr. P. Venkatesh sir, who is Associate Professor, Sri Sairam Engineering College, Chennai. I welcome you, sir, from my organization and from all my participants. I welcome all the participants, those who are joined here. And this topic is related to finance, marketing. I welcome you, sir, and I request you can start your speech. Indian capital market in the digital era. Thank you, sir.
Thank you very much, BETKAR sir. It's a glad opportunity to be associated with you people. In a very short notice, you accepted and you've given me this opportunity. So feel very proud of association with you people. So today, let me share my slide. So is this my slide is visible to everyone? Yes, okay. So good evening to one and all present here. So myself. Okay, okay. Right. So very good evening to one and all present here. So myself, Dr. Venkatesh, Associate Professor, Sri Sairam Institute of Management Study. It's a part of Engineering College. It is in Chennai. So today I'm going to present a title called it as Indian Capital Market in the Digital Era. So I think we can relate this title in the present context. What is happening in Indian capital market? And we know that this capital market, there is a very good investor all over in the globe. I think we all heard about him, of Warren Buffett. He quoted information that share markets are the mirror of economy. So anything which happens in the economy, it will reflect in the market, share market. So it acts like a mirror. So nowadays we can see that for the last 1 month, we can see there are a lot of fluctuations in the capital market, not only in the Indian capital market, all over in the globe. So it's keep on falling down, it's keep on rising up due to the war situations in the Gulf region. So these all things are happening. So today let me have a discussion about how this Indian capital market is performing in the digital era. So before starting this title, let me go to some basic information of Indian security market. So how this ecosystem is created. So basically how this fund is flowing, from where it is flowing, who are all participating in this. So there is a big network which is working in this era. And nowadays, if we want to compare with the previous regions in the capital market, nowadays it is very vibrant because of the technology involvement, and more new investors are participating in the present situation. So this capital market flow is completely blowing up. There is more funds are included in the day-to-day Indian market. Not only this capital market, actually capital market has a lot of forms. So in all the forms, it is going and regulating in a proper way, right? Let me understand how the capital market is running. The capital market is supporting to whom, where the money is created. Actually, they are like an intermediator. So they collect the money from the people like you and me. We people invest into the market. We people invest into the companies, and companies are using our money, and they are creating their industry and infrastructures, right? So whatever the surplus money, it means the savings. We people save money. We convert this money into a big portions of investment. We are investing into the security markets. So these companies are using our money, and they are creating their infrastructures, they are creating their industry, they are fulfilling their requirements. So this is how the fund is mobilizing, right? So fund is mobilizing from the household to the industries. And this security market, capital market, they are playing as an intermediary role, right? So they are connecting the surplus money and they giving to the industry. So this is how the flow of money is to be serviced. It's like a chain. So the money is keep on flowing. And the important, I want to display some facts and figures of the present scenario. As you people know that we are 5.4 trillion economy in the present context, and we are moving towards our Indian capital market 3.0. In the 90s, we are in 1.0. In the 2010, our market we are recognizing as when the global crisis hits the market, we are recognizing our market as a 2.0. And after COVID, especially for the last 3 years, we are supposed to be called our market as 3.0. And due to this rapid increase in the GDP of our country, here our total market capitalization, it is almost 459 lakh crore. So think about this volume. So how much of money is pumping into the market. And another important fact is the total demat account, which is almost about 19.9 crore. We have a country total population of 140 crores. And think that we have only involvement of 15% of our population, which actually this 19.9 crore is a very big number comparatively with some other market of New York Stock Exchange or Singapore Stock Exchange, or you can take any other country's stock exchange. The involvement is very high, and especially in the last 3 years, the involvement is rapidly increasing, where this new Gen Zs, they are coming into the market and they are bringing the investments into the market. And another important fact that previously our market is completely relied on the FIIs and FDIs. It means the foreign direct investments and foreign institutional investments. So we are expecting the flow of money from the foreign countries to be inflowed in our market. But nowadays, our total domestic inflow, it is almost 18 lakhs crore. So we are not depending on the foreign investments, because what happens if something goes wrong in the global scenario? So automatically the Dow market will hit. On the next day, our market also opens in a negative mode. But in the present context, due to of more domestic inflow of money and regulation of in domestic market peoples in our present scenario, we need not have to react about the global scenario. So these are the important facts and figures in the present Indian capital market 3.0. So let me understand, there are 4 core objective of the market system. Sorry. So there are 4 core objective of the market system, where you can find there is an capital formations, there is an liquidity, there is a price discovery, and there is an economic growth. Basically, which already we discussed, that the capital formation, where we can say that how our peoples are saving our money and we converting this to as a investment. So these companies are using the people's money. So is another important fact in India that our Indians are having a good tendency to save the money. We people save a lot of money. So whatever the money we save, we convert this money into a investment part, right? So majority of the money they may convert into gold or some real estate or some real assets. But last 15 years, we can find a drastic change in the capital formation, where people tends to move towards the capital market. Previously, it is not happens, but in the present context, in the digital era, people are very much aware of the market activities and they want to convert their money into these types of investments. If you compare our Indian capital formation with some other countries' capital formation, it is completely different, because you can find that some other economy, they don't have a tendency to save the money. So they are deficit of money. But our Indians, we have a strong banking foundations, we have a strong saving investments, saving capacity. So this saving is easily converted into investment. So these are a very much good thing which is happening in the investment capital. Then another core objective of the market system, it provides a liquidity. Whenever we want to convert our money into a cash, we can easily convert it. I think there are some settlement systems which are introduced in our market, T+1, T+2, and later we will discuss how this clearing houses are introduced to the investors and how these clearing institutions helps to get a liquidity in the market. So nobody is having a doubt of doing an investment. So if they are doing an investment, it is very safe. Like they are putting a money into a bank. So in a banking, they are giving an interest, and in this market, they are getting a dividend if they are investing into the equity shares. The another core objective of the market system is the price discovery. So there is a fair value which is doing in the market. So we can't say that it is like a gambling. So, right. So very many people are misinterpreted that capital market is like gambling. Actually, it is not true. Here is a price discovery where there is a solid evidence of movement in the prices. How the prices are moving, what is the reason. As I stated earlier that Warren Buffett stated a quote that stock markets are like mirror of economy. So what is the economy is happening, that reflect into the market, and we can have evidence that for the last 15 years, we can see that our economy is keep on growing. We are growing at the rate of 7.8% in the present scenario. And probably if I have a capacity of moving up to 12%, probably our market is also going good. So it will reflect in all the sectors having a good appreciation of money. And there is a base. There is a reason of moving this thing. We can give an example that last month what is happening due to a shortage of LPG, and due to there is a fear of among the people that there is a shortage of crude oil also. We can't able to recover our crude oils. So what is it is impact? It may impact in the increase in the fuel prices, petrol prices. Due to this, what is happening? People tend to move towards the electric bikes. I said as Ola vehicles. So the share which is traded for 22 rupees last month, now it is keep on appreciated. Today it is traded for 40 rupees. So we have a price discovery, how this company share prices are moving, on what basis it is moving, and what is the reason that there is an appreciation in the value of the shares. So companies itself, we can able to have a fundamental analysis, or we can do some other company analysis, industry analysis, and we can easily able to predict how the price is discovered in the market. So it is very fair enough nowadays, and there are a lot of new techniques which are introduced in the market where we can easily able to update ourselves how the price is to be simulations took place in the market. The another objective of this market system where we have a very strong economic growth. As the economy is growing, the market is growing, more money will inflow into the market, more the company will earn, more it will give the dividend to the people, and it will create a welfare of an economy. So economic will grow. So based on this 4 objective, the market system will run. Let me have a comparison which we are already discussing that we have a capital market 1.0, we have a capital market 2.0. So we can classify the capital market 1.0 as a 90s. And the capital market 2.0 we can classify from 2000 to 2010s. And the capital market 3.0 we can take after the COVID, because after COVID there are a lot of changes which happens not only in capital market, in all the dimensions, in all the things. In fact, we people are talking each other just because of the COVID itself. We can't have imaginations of doing an online teaching or online presentation platform. So let me have a comparison of how this capital market 1.0, 2.0 and 2.3 will changes. Let me have a discussion about the infrastructure. Basically, this infrastructure in 90s, there is no infrastructure actually, because there is offline trading which is happening. So completely the NSE and BSE, they are not having any type of technology. In fact, they are using cash for the transactions. So infrastructure is completely not available. They having some stock exchange in our Chennai. We have Madras Stock Exchange. So there is a floor-based trading system. Everyone has to go physically and they have to buy the shares and they have to sell the shares. So that is what happens in the capital market 1.0. In capital market 2.0, where we are having our online platform, trading platforms, where the brokers are introduced. A lot of new brokers are emerged in the market, like Sharekhan, Angel, Zerodha. These brokers, they are immersed and they are using the web platforms and broadband technology. And BSE and NSE markets also using some software. BSE is using a software called it as Bold, Bombay Online Trading Terminal, and NSE is using a software called it as NEAT, N-E-A-T, NEAT. So these softwares helps the companies for doing a simulations. So basically it is like an algorithm where the demand and supply will decides the prices. So how many number of buyers are there, offer price, issue price, like this, the pricing will be having a segmentation in the market in this thing. Presently, what is happening, we are using API economy, we are using clouds, we are using blockchain pilots, and how this market is performing. So these are the predictions. We can predict market up to 2030 with the current API scores. So that is recent trends which took place in the market in 3.2. In the perspective of the participants, there are very less participants in capital market 1.2. Why? Because we can see that it's a floor-based trading system. Investor awareness is also very low. People are not having so much of investment so that they can put into the investment in the capital market. That is happening in the capital market 1.0. I think in the very premium segment peoples, they only using this market. In capital market, there is some awareness among the investors. So the earliest retail investors, they came into the market. Foreign institutional investors are investing in the market because markets open up in 1992 as the globalization impacted in India, and due to our late Prime Minister Dr. Manmohan Singh, when he was finance minister at that time in 1992, he introduced the globalization concept and he opens up the economy. And due to this, a lot of new investors, new company, they are entering into Indian market. So globally, a lot of investors, they are ready into the Indian market investments. It is not only the FDI. In fact, FIIs are much interested. And now in the present context, also a lot of foreign institutional investors, they are investing a lot of money. Presently, due to these changes, the capital market 3.0, we can have a evidence of almost 19.9 crore demat account, which is opens. It means almost 15% of the Indian total populations, they are having the demat account. And with the demat account is nothing but it's a dematerialized account where the people having the investment options in the capital market. It's works like a bank passbook where we can have a transactions details. So likewise in the demat account also, we have a transaction details of our capital market, what type of shares we are having, what type of quantity of shares we are holding, what type of dividend interest we are receiving from the market, what is the funds we are maintaining in our account. Everything it is showing in a demat account. So nowadays it's a very powerful domestic institution which is created in a capital market 3.0. In a capital market 1.0 in the terms of defining future, I think in 1996 only, when the NSE created, they introduced this concept of dematerialization, where there is a completely ban of debt of open outcry, which is used in the floor-based trading system, where every broker, there is no concept of broker at that time. Many jobbers. So these jobbers has to shout for the prices. So each and every time they have to find a new buyer in the floor itself, which is a very, very difficult system. They can't able to find that thing. And after that, in capital market 2.2, lot of new investors, they are interested. Brokers are having a very aggressive marketing campaign towards this thing. Derivatives market introduced in the market, SME exchange platforms, and lot of investor information systems are introduced by the market. In the present context, you can find algorithm formulations is there, global bond index inclusion is there. Nowadays, in this last year, ESG alignment is there, where we have a economical, social, and global alignment is there. So these are the evolution which took place in the capital market, and we are working on it. Our capital market is keep on growing, and we can expect a variety of changes in the capital market in the upcoming days. As I keep on insisting that we have a very great number of investors, and the possibility is also very, very, very big. Why? Because as I already told that we have only 12 to 15% of our total population participation in the capital market. Just think about the numbers. If this number will increases by another 15% also, there is a big blow in the market. Lot of outputs, cash output, cash inflows which took place in the market. As you can see that there is a retail tsunami which took place in that to be in, especially in the COVID. In this figure, you can able to find that in March 2020, there is almost 4.2 crores investors are there. Retail investors. I'm talking about only the retail investors. And in June 2023, it jumps to a number of 13 crores. And in June 2025, it is almost touches to a number of 19.9 crores. Probably if this June we can able to take the data, it may increases up to 25 crores also, probably. So such a big number increases. So there is almost 15 plus crores new investors are adding in the 5 years. So it will create a driving deep financial democratization. So the flow of capital is also tremendous, where you can find that the foreign institutional investors, the FIIs, it is almost 29 billion in 2019. And now in the present context, we can find it is almost 18 lakhs crore, right? So almost the number are very, very big. And the domestic investors are also created a huge impact. So the domestic flows are now 7 times greater than the FIS flow in the market, which is a very good sign for our Indian market. So presently we can able to give a evidence that majority of the retail investor, actually in investor, there are some segmentation. There is a retail investor, there are some qualified institutional investors, and there are some other big investors are available in the market. And if more retail investors are there available in the market, it will create lot of capital flows, because these retail investors participations are very important to the market. These people pumps the money, and they are available in the market for a very longer period of time, because these retail investors is not just about earning a profit. Instead of that, they want a proper dividend out of the market. So they stays in the market for almost 15 to 20 years. And let me have a view of market cap to GDP ratio, because we keep on talking about GDP. We are the 4th largest economy in the world, and we are marching towards number 2, number 3 like that. And here you can find that the total market capitalizations, which is almost 459 lakh crores, which is a very big number. And the household participation, where in the present context we can say that out of every 5 Indian household, one one Indian household now participate directly in the equity market. So that is a very good sign, which is creating a lot of flow of money into the market. And the global equity market by size, almost we are in number 4. And the capital versus banking, almost capital markets are now 1.7 times bigger the size of the banking sector. So almost all the banking sector itself, they are facilitating the capital market. They are opening the demat accounts on the basis, and not only it is limited to the brokers, these banking sectors also, they created a good impact in the equity market itself. Let me have a discussion of the UPI settlement pipeline, because nowadays, I also want to tell a reason that how this number increases after COVID. Because of the digital payment system, because of the digital economy concept which is introduced by the government, the digital payment system is also one of the effective way. Because previously we have to issue a check to buy a script, to buy a share. But nowadays, due to digital economy, due to digitalizations, due to UPI settlement system, and another system which is introduced by market is APSA system. So these are the new facilities in the digital era introduced by the market, facilitates by the market, and it will make a ease of the investors of doing a trading. So the first stage, the investor bank account will be verified where the funds are flows via UPI in single block and multiple debits like that. The stage number 2, it goes to the broker. Nowadays, I think in our college, students are using this platform. It is not, previously we have to go to the brokers. Nowadays, in their gadgets, in their mobile itself, they can download anyone. Grow is there, Zerodha is there, Angel is there. The facilities are many. The broker itself are converting as an applications, and they are using very good execution programs, right? So execute the trade by the brokers and physically holds the investor capital. So they are just doing a linking. First, we have to issue a check to the brokers, then brokers will do a settlement system. But nowadays, it is very easy. Based on the settlement time or settlement this thing itself, they can easily able to convert the money. The third stage, which is clearing corporations, there are 2 corporations which available in the market. One is CSTL and one is NSTL, National Security Depository Limited and Central Security Depository Limited. This T01, T0 and T+1, which is the new settlement systems. Actually, it's nothing but it's a settlement system. One T+1, it means 1 day settlement system. It will go up to T+5. Where they can use a settlement system for next day, they may use T+1 or the 2 days T+2. The fund will be debited directly to the bank account like that. So these are the new things which is introduced in the market in the present scenario, where the investors are winning from the market also is very easy. It is going directly to their account, to their UPI account, UPI linked bank account, which makes them happy, and which will create more confidence among the investors. Let me have a view of how this progress map which took place. So how this flow will be created. The company, they are very in need of money. It may be a new company, it may be an existing company, where they want, if a new company, they don't have a limit, they only have a limited capital, and they for money, they goes for a banks will. So what the other options they have for a new company? So they will go for a market regulatory, they will subscribe the shares. And for an existing company where they want to enlarge their business, where they want to expand their business, or they want to go global market. So like in that situation, they are increasing the market share. I think last 3 years, there are a lot of companies, foreign companies, they invested in Indian market. Companies like Hyundai, they waited for a very long period of time, and finally they launched their IPO. So it not mean that they don't have money, but they want a market recognitions all over in the globe. So they are going for a subscription of shares, Hyundai company. Likewise, we can give a lot of examples for that, how they are doing and for what reasons they are doing. So they have a raising of capital. So for that, they require the SEBI approval. They have to follow the regulatory guidelines of SEBI. Once SEBI will give, Security Exchange Board of India gives the approval, then the company has to draft a prospectus. Prospectus is a document which is issued by the company where all type of information is there. Where the company is registered, what is the name of the company, what the company is doing, who are the organizational bodies are there, what are the company's AOA, MOA, everything they have to mention in the prospectus. Actually, prospectus is a base document for an investor to get to know about the company, what the company is doing. And then after the prospectus, the company has to issue an IPO, initial public offer. So for a first time, if the company are listed in the market, they have to issue IPO. IPO, we call it as initial public offer. Nowadays, it is very easy to find an IPO because last 20 years, we are very difficult to have the IPO because IPO will only publish in the newspaper or some magazines like that. Nowadays, you can find IPO in all the trading platforms. It is easily available. So have an example of IPO. So IPO only gives the information of bidding the shares, how much investor can bid for the shares, what is the total allotment of the shares, what is the face value of the shares. So IPO, based on the IPO only, the investor can bid for the shares. And next to the IPO, only the next stage where the companies can do an allotment of shares. So allotment, I think there are a lot of parties are involved for doing an allotment of shares. Underwriters are there, fund managers are there, company representatives are there. So they are taking the allotment process. So generally, how the shares are allotted means the investor who bids highest for the shares, the share is allotted to that particular investors. So subscription of shares will goes for forfeiting of shares first, or if it is a condition of under subscription, it means anyone can get a shares. But in the condition of an over subscription, then the allotment will be very, very limited. So and we have to find out what type of issue is there, because a type of issue is there where the company having a right issue or the company has a limited issues. So what type of issues we have to check. And after the allotment, the company has to list in the market. It is very basic. We have to know that every company has to first list in the primary market. Based on the primary market only, they can go for the secondary market. Without listing in the primary market, no company can go for a direct into the secondary market. And basically, this primary market is an offline market, and the secondary market is an online market. So in a primary market, the investor can only buy the shares. They can't able to sell the shares. They are only eligible to buy the shares. Whereas in the secondary market, they can buy the shares. They can sell the shares many more times. So that is happening after the listing of the shares. This is a roadmap of having this settlement system. So the investors, they use terminals of brokers. Either they may call the brokers and they can go for a purchase and sell of shares, or they can use some facilities of the brokers via applications, and they can go for manual buying and selling of the shares. The brokers can go for a stock market. There are two stock markets are there in India. One is BSE and another one is NSE. Simply, we call it as the Sensex and the Nifty. So these are the two major stock exchanges available in India who facilitating the trades. Almost there are 23 stock exchanges available in India. And apart from that, the another specific industry specific exchanges are there. Bank Nifty is there. Likewise, each and every sector, they have their specific exchanges. Once these stock exchanges are to be get a receipt from the brokers and the investors, then they go for a clearing corporations. I already told that either they can go for a CSDL or NSDL, where they have a risk management and the guarantee. So all type of share certificates are issued by the clearing corporations, and finally that goes for a settlements. So funds and security exchange will took place. These are the two stock exchanges which I previously mentioned. One is Bombay Stock Exchange, BSE, and another one is National Stock Exchange, NSE. One way, BSE, we also call it as Sensex, and National Stock Exchange, we call it as the Nifty. So these are the two major markets. I think BSE has a very long history. It started in the year of 1985, which is started by the British. This is BSE is the oldest stock exchange in the Asia. It is having a lot of 96,000 scripts so far. BSE is having. NSE is a very new market. NSE starts only after 1996. But what is the reason that we have an emergency of doing another market? Why not we continue the BSE? Why how to we go for a new market called as NSE? Why? Because when our globalization took place, there is only one market which is BSE, and when the government decided to have a digitalized platform, and they want to convert the market into a screen trading market, they are going for a national stock exchange. So all type of A category shares only comes in the NSE, and whereas BSE you can find a lot of other category of shares also. In NSE you can find that only A category, and that to be it is a performances of 30 shares, 30 company shares. There is a NSE Nifty is there, Nifty 50 is there, Nifty 200, Nifty 100, Nifty 500. Likewise, there are a lot of segments out there. That is a different thing. It will create a lot of information about that, but roughly we can know that these two exchanges are biggest platforms in the stock exchanges. This is the two agency I'm talking about, the depository systems. One is NSDL and another one is CSDL, National Security Repository Limited and Central Security Depository Limited, where they are facilitating the money and all type of settlement system. These are the agency who are responsible for issuing the share certificate. Previously, in this slide, you can find the physical form of share certificates. If some investor is investing money, this agency, they are issuing physical stock certificates. It means it is a guarantee by the market that this person XYZ is owing the shares. He purchased the share for this much of quantity, this much of rate. But nowadays, nobody is worried about the share certificates because everything is in a dematerialized format, demat account. So everything is digitally available, which is a very good facility is introduced. It is not only if we are owing our shares last 20 years before, it will appear in our screen. And you know that the market is keep on fluctuating. There is a keep on appreciation in the share prices. So we can say that the market money is also appreciated and we have a record of our money. These are the market participants. Broker is there who facilitate the trade for the investors. Repository is there, NSDL, CSDL. Market Exchange, Security Exchange Board of India, they are recognized as the market exchange. People like you and me, we are the retail investors. There are FIAs, institutional investors are there. They are dealing with the mutual fund, insurances, and large capital pools. These are the market participants who regulates the markets. Let me have a view of financial instruments. Asset class, actually there are many, but for the sake of the information, I'm just giving only three. There is an equity shares. So basically what is this equity share? Where it is like a guarantee by the companies to have a pay dividend on the basis of the company's profit. Equity shares also having a classifications where they have a preference shares. So that part is different. But in a market, many investors will go for or have a preferences of equity shares just because to get a dividend out of it. And they can sell it many more times and they can make a profit out of it. Nowadays, you can find that a lot of investors are very interested to go for bonds itself. Because what is the difference between this bonds, debenture and equity? Equity will provide a dividend, whereas bonds and debentures, they will provide a interest. And that will be in a fixed basis. Nowadays, you can find that many investors are thinking in a different way. Previously, actually, it is not happening. Nowadays, investors are thinking of way of and sources of income. We are working somewhere and we are getting a salary out of it. That is also one of the sources of income. But what is the source of income? Is a active income and passive income. By the way of getting a salary, that is, we call it as active income. Daily we go to work, we are getting a money, that is an active income. But you can find that there is another way, we call it as a passive income. I invest somewhere and that generates the revenue for me. In fact, bonds and debenture, every month they are paying the interest. If you go and deposit some money in the fixed deposit in the banking systems, they just pay only 7% to 8% of interest, and that will be you are eligible to get that interest after the end of the 5th year. But in a bond and in a debentures, every month you can get a interest out of it. So based on your total investment, which is a fixed basis, and that is a secured one. So risk is also very, very less. So nowadays the trend is completely changes, and investors are thinking in a passive way of income and active way of income. So we can find a lot of successful people in the market who can able to manage their both active income and passive income. Right? Many are thinking about only in active income. I'm going for a work and I want the salary, I want increment. But what about the passive income? Whatever the money you save, that have to be appreciated, and that will fetch us some returns in a over period of time. So bonds and debentures are the best investment opportunity which the market gives for our investors. Another one is mutual fund. I think it is very, very boomed now. But previously, government are giving a lot of campaign, bringing a lot of celebrities, bringing a lot of sports personalities for have a marketing of mutual funds. But if we go and check, the mutual fund have a tremendous growth over a period of time, especially for the last 10 decades, especially for the last 1 decade. I am a investor in the mutual fund, and I have a very good appreciation of money in the mutual fund, and that will be a very, very low risk. It's a very good investment opportunity, and nowadays a lot of youngsters in their early stages itself they are investing in mutual funds. So the appreciation of money is very good, and a lot of category of funds is created. Vibrant funds. We have only limited funds or large cap funds, mid cap funds or small cap funds, index fund. But nowadays you can find almost 1,000 category of types of funds are there. So these are the new financial instruments which are specially preferred in the present context. These are the regulatory framework, how this market will functions. So basically, this agency is controlled the market, that is SEBI, Security Exchange Board of India, but they are having a control of the Ministry of Finance. They don't have an internal control, but they have external control. They have to follow the guidelines of the Ministry of Finance, but day-to-day transactions the government will not able to do. But it is supported by the RBI, Reserve Bank of India. So all type of monetary policy which is created by the RBI, they have to have a connections of SEBI. So SEBI is having a coordinations among the RBI. They're having a coordinations about the Ministry of Finance, which is overseeing the details, transactions or regularity. And the SEBI will have a mandate of protecting the interest of the investors, regulate the intermediary and exchanges, and promote the development of markets. So this is how the SEBI is work. SEBI is the sole authority of regulating the market, all type of decisions all type of framework are to be framed by the Security Exchange Board of India itself. Now you can find that I think many of you don't know how this NSE algo participation algorithm trading which took place in the market, and in what platforms this algorithm trading took place in the market. You can find almost 73% which goes in the stock futures. So after the implementations of the derivative market, there is a future options, there is an put option, there is an call options, and there is a swappings which introduced in the market. So algorithm trading, which is impacted now, and a lot of investors are having a good return in the stock futures, and simultaneously they having the return in the equity futures also. Equity derivatives also have a tremendous growth of 67%. We have a equity options there. We have a cash market, or so call it as money market. Nowadays, they are also actively trading in the market. We have a index futures. Many investors are investing in the indexed futures, but these all are facilitating via algorithm only, which is based on the API. Brokers are using this API platform. They are having a very systematic executions nowadays across the derivative. Because derivative is a little bit confusing to understand, but it's a high return giving platform, the derivatives, which is supposed to be regulated for 1 month. Every month, last Thursday, the derivative market closes, and every month, the first day, the derivative market runs. So it's an option for an investors to trade and to get entered into a market anytime, any point of time, because for a intraday trader, he can retain himself for 1 day. But for a derivative market, they can have a 1 month retention, and the prediction and the applications are very high in the derivative market. This is the closed loop ecosystem in India, which took place. We call it as India 3.0, where you can find there is a technology and access overview of what I presented today, where we have a UPI, we have a kite, we have a API systems, so which is completely unlocking the massive retail participation. So which is how these retail investors are easily attracted towards Indian capital market nowadays because of the involvement of the technology. So new traders are feels very easy of handling the technology and doing a sort of investments, and a lot of money is flowing. So we are doing very good in technology and market regulations, and market education is also increases day by day. And the scale of capital is also keep on growing, and whatever the data which is I am giving, this is data of 2025 December. That 19.9 crore demat, probably it may crosses 25 crores nowadays if we have a June census. So the domestic capital flow is very high, and the liquidity also very high. So we need not to depend on the foreign investor. These institutions which thoroughly withdraw the money and our market falls, which happens in 2008. There is a global crisis, and all the investors, they withdraw their money. Due to this, our market crash. Daily we find a 20%, 10%, 15% decline in our market previously. Nowadays, in this crisis, what happens last month, what happens last week, in this great crisis also we able to survive. So there is an indigenous market which created nowadays due to the help of the retail investors. And we can find the involvement of ESG. So this is a new concept where economical, social and global concept which is introduced, where the participation, we can have a systematic trading and sustainability. So these institutional ESG mandates are compulsory, voluntarily it is implemented in the market. So there is a real-time guarding system where the investors are protected by the regulators of SEBI. So lot of investors protections protocols are there. So anything which goes wrong in the market or it is in a high risk. In fact, the market is clearly mentioning the risk parameter. So A category share is there. So we can able to understand that A category share, the company which is keep on regularly paying their dividend, they have a continuous 5 years profit. So they comes under A category shares. So proactive regulations which is introduced by the market. So these are the tips by the investors, tips for the investors by the market. So they can able to get an awareness and they can able to do their investment in a proper and systematic way. So this is a thing which we have to understand in the present context. So this is the end of my slide. So I hope this session is good for you. I invite anyone to ask any questions. Open forum is open to ask any questions.
Thank you, Sarji. I will request all participants to ask queries. A very experienced person, a learned person in the field, he's explaining the terminologies, even a person not connected with the finance accounts and, other aspects. I'm also getting the information. So wonderfully delivered the speech. So I will request, all participants to ask questions.
You can ask any question. If you have a question of having an investment, or you have a question of asking any other thing, or if you are a new trader, if you want to invest somewhere in some other avenues also, you can ask any question related to your investment.
Good evening, sir.
Yes, madam. Good evening. Preeti, madam.
Yes, sir.
Yes, madam.
सर यस मेरा क्वेश्चन है सर कि न्यू इन्वेस्टर्स के लिए मतलब ये क्या क्या रिस्क मतलब होता है और कैसे उसे मतलब फर्स्ट ऑफ ऑल उसे क्या क्या केयरफुल होना चाहिए इन्वेस्ट करने से पहले, या सबसे पहले इसमें है कि सबसे लोएस्ट अमाउंट से स्टार्ट करना चाहिए, या फिर किस तरह के मतलब सावधानियां प्रिकॉशंस उसमें लेना चाहिए?
मैडम अगर आप न्यू इन्वेस्टर हो तो आपको बहुत सारा प्रिकॉशंस लेना पड़ता है, बिकॉज एंड मेरे तरफ से ये एडवाइस होगा कि गो फॉर पेनी स्टॉक्स, क्योंकि आपको एक्सपीरियंस चाहिए एंड आपको एक फेथ होना चाहिए मार्केट में, दैट वॉट एवर द मनी यू आर इन्वेस्टिंग दैट इज सेफ and you are getting the proper return out of the market. So for a new investor, for a new trader, it is very important to go for penny stocks. Buy a stock for less than 10 rupees. I think Vodafone is a company which is traded for 8 rupees, and within 2 months it is increased to 12 rupees. So that type of penny, and that is, I can give another example of my own experience. I am investing in Suzlon. In 2010 to 12, it is almost trading for 5 rupees. In 2013-14, it went to 26 rupees. I sold out. In 2018, it is traded for 2 rupees. And now it is traded for 45 rupees. And if you are holding for 1,000 quantity, 1,000 number of shares, which gives a very good return. So for a new investor, we have to learn the market sentiment. First of all, we have to understand the market sentiment, how market is behaving, and we have to keep an eye on the global event and domestic event as well as the international event. So based on these informations only, we can able to go for a further investment, and you can go for mutual fund, or you can go for some other type of funds which is very, very safe. So learn the market, then you can able to this thing. If I am telling my experience, I am trading from 2005. So I know the market movements. I don't know the market sentiments. I know which industry will impact it on what day, on what days, what prices. So you have to learn. You have to spend minimum of 5 years first initially. Then you can do a lot of wonders in the market. You can get a very good return in the market.
Yes, sir. But sir, after COVID, इन्वेस्टमेंट का जो रेशियो आपने दिखाया वो काफी चेंज हुआ है। तो इसमें जो भी कैपिटलिस्ट है या फिर जो बड़े बड़े इन्वेस्टर्स है, उसके लिए तो रिस्क बहुत ही आसान है, बट सर मिडिल मैन कैसे सर इसमें अपने फेथ को ये कर सकता है, मेंटेन कर सकता है, कैसे वो अपने आप को उसमें ये कर सकता है फॉर ए कॉमन पीपुल सर? तो लाइक गांव के जो भी रहते हैं, जैसे थोक वो रिटेलर होते हैं ना, रिटेलर्स होते हैं या मिडिल मैन जो भी है, छोटे बिजनेसमैन होते, स्मॉल बिजनेसमैन, तो ये कैसे इसमें, क्योंकि ये लोग डरते हैं कि मैं इन्वेस्ट करूंगे तो मेरे को पैसा डूब जाएगा, इस तरह के बहुत सारे फियर्स होते हैं। तो उसके लिए ये तो आपने बताया अभी कि वो फेथ करना पड़ेगा। आई थिंक फेथ बहुत ही फेथ जरूरी है, बट कॉमन मैन कैसे सर उसे मोटिवेट किया जाए कि इन्वेस्ट करो, क्योंकि विदाउट इन्वेस्टमेंट आई थिंक कोई भी डेवलपमेंट के लिए इन्वेस्टमेंट बहुत ही जरूरी होता है। अजय मैम,
मैंने एक एग्जांपल भी दिया था मैडम। एक्चुअली वो जो ओला कंपनी है वो स्कूटर मैन्युफैक्चर करता है, ओला, एंड दे आर मैन्युफैक्चरिंग द बैटरी टू व्हीलर्स। अब जो पिछले महीने में जो वॉर का सिचुएशन है, हम लोग सब क्राइसिस में गुजर रहे हैं, वॉर क्राइसिस। सो हमको पता है कि अगले 2-3 साल पे हमको पेट्रोल नहीं मिलेगा। सो दूसरा ऑप्शन क्या है कि हमको बैटरी ही चाहिए, बैटरी व्हीकल्स ही सस्टेनेबल डेवलपमेंट के लिए चाहिए। सो कंपनी से आके देखेंगे तो 2-3 कंपनी है, टीवीएस कंपनी और सब दूसरा कंपनी जिसका शेयर बहुत ज्यादा है। सो ओला कंपनी के शेयर आके 22 रुपया था पिछले महीना, अगर आज कल का रेट आप चेक करोगे तो 40 रुपए का है। Within a month itself it is keeps on moving, and it's very understandable for a common people. एक common people आपके जैसे और हमारे जैसे common people को पता है कि अगले 2 साल पे और अधिक जाने वाला है। So this gives a motivation us, and you can take example of the solar industry. सोलर सबके घर में अभी सोलर लगने वाला है। इनफैक्ट द गवर्नमेंट इज गिविंग 75% सब्सिडी फॉर सोलर। इन आंध्र प्रदेश द गवर्नमेंट इनिशिएटेड फ्री सोलर फॉर एवरी हाउसेस। इट्स अ न्यू इन्फॉर्मेशन, लास्ट वीक का इन्फॉर्मेशन है। आंध्र प्रदेश चंद्रबाबू नायडू का गवर्नमेंट ने हर घर पे सोलर लगाने का फैसला लिया है। एंड ऑटोमेटिकली द अदर स्टेट्स, अब हमारे स्टेट में तमिलनाडु में इलेक्शन है, असम में इलेक्शन है, सो गवर्नमेंट इज प्रॉमिसिंग ऑफ पुटिंग सोलर इन एवरी हाउसेस। सो थिंक अबाउट द सोलर कंपनी। सो सोलर कंपनी में हम इन्वेस्ट करें तो अपना शेयर्स आके जरूर अप्रिशिएट होगा इन फ्यूचर। So these are the things we have to understand as a common man. So it's very safe only, and we can relate our terminology with the market terminology. हमारे घर पे क्या ज्यादा जरूरत है, कौन सा, what are the products which we are using mostly in our household. If we invest in that type of shares, probably we can get a very good return. I hope I cleared your questions.
Thank you, sir, for your most good suggestions and a very nice lecture today. Thank you so much.
Thank you.
Thank you, Priti ma'am. One wonderful question. So everyone, I think, got the answer. So it is the question of every person participating in this program. So wonderfully asked question. Any other participant would like to ask question? Please, the forum is open for you. Sir, I want to ask one question. Myself, Dr. I want to ask one very important question. After the globalization, means what you have mentioned, a reference of our ex-Prime Minister Manmohan Singh ji,
Yes,
right? He was one of the authority. What he has done, he boosted the Indian government or Indian capital. So that is one thing. And globalization, he has brought the globalization. But what do you think, what are the adverse effects? Now the war is going on. So you'll find the global, the turbulence also affects our market. So what do you think about this? So whether the globalization is one good thing for us or it may sometimes trouble us?
No, it is always good for us, sir, only. There is no doubt at all. Whatever the Dr. Manmohan Singh, the legend person, did to our economy, that is great. That is fabulous. There is no mismatch of that. We can't have a question out of that. He has a great thinker. So whatever the progress our economy is doing presently, just because of the globalization, there is no doubt at all. And to address your question that what is the impact of having a war, there is no impact, sir, frankly, because we know that the market will fall and next year the market will rise again. So it's we can take in an opportunity. It's an opportunity for us, for a new trader, for everyone. It's an opportunity for us to invest it, and we can have a good return out of that. Although almost gold prices increases, silver prices increases, present now you can find that it is completely flat. And there is a 2 week ceasefire between, and now in Pakistan the trade deals took place. So definitely it will concluded in somewhere, it will landed in somewhere, and we can find that like another next week the market will rise again. So now it's a great opportunity to invest. It will goes up to 30,000 for Nifty also. It is almost traded for, it touches 22,000 and now it is traded for 24,000. It goes up to 30,000. We can take as an opportunity. We Indian always thinks as an opportunity. Any crisis, it's an opportunity for Indian.
So we should consider it as a challenge, and challenge it has to be turned into opportunity.
Exactly.
So,
we Indian finds everything as an opportunity, sir.
Great, sir. Sonu Kumar ji, would you like to ask question? आप कोई सवाल पूछना चाहते हैं सोनू कुमार जी?
No, sir. No.
Hello, sir.
Thank you. Informative information, sir.
Yes.
Topic.
Anyone? So, sir, you have given a wonderful explanation regarding the Indian capital market in the digital era, and we are living in a digital era. Definitely, the share market is reaching home on your cell phones, and it is that there was a time where people have to take help of some assistants, but nowadays, people are having their own investments. They can think about their own investment. That is, the independent thinking has developed. So today you have talked about the regulatory bodies and how they really control. Many of the times, what I was feeling that the share market is, like a private commodity. But now you have said that it is under the Indian government and RBI and SEBI. All these things you have discussed in a very depth, and you make it very clear what you mean by mutual funds. So that is also a wonderful thing, and no doubt mutual funds are doing a wonderful job. Nowadays, people are investing because there is a less risk available, present with the mutual funds, bonds. So I think you have clarified a number of good topics, and I'm a medical person. I'm not concerned much about the Indian capital and other things, but wonderfully explained, in such a way that we can understand that what we can say, what is Indian capital and how the market is growing and what is the market behavior, the financial behavior and sentiments. No doubt the study is one of the very important thing, and training, study and experience, I think that counts a lot, what I can perceive from your seminar. So thank you very much. I take this opportunity to thank sir on behalf of all participants, and especially Veer Maheshwar Charitable Trust, Latur, MS India, for organizing this international webinar series. And number of authorities and number of such a celebrities are coming to our seminar, and really they are enriching our knowledge, and we are developing not only in one direction, but different topics really helps us to grow in all the ways. So once again, I thanks Dr. P. Venkatesh sir, Associate Professor, Sri Sairam Engineering College, Chennai. I thanks our dear Dr. BETKAR sir, Principal sir. He is the reason for this seminar, and he is motivating us, and his energy is really wonderful. I appreciate the questions, that has come out for you. Preeti ma'am has asked question. So it was a very wonderful question, a basic common question what is asked, because the risk matters, the risk and benefit, that balance, what we had to understand, risk balance, right? Risk and what we can say, the benefits, risk benefit balance should be understood. So once again, I thanks all participants. The link will be provided very shortly from Dr. BETKAR sir. So once again, thank you, sir, and we will, we'll expect you for this seminar once again to grow our knowledge further. Thank you.
With pleasure, sir. With pleasure. I also want to thank for giving this opportunity, and I also thank for all the participants who joined and who shared their valuable time with me. So thank you very much. Thank you for the organizer.
Thank you very much. Thank you very much.